This is Haskins with a review of 11th of Jan 2011 and the preview of the 12th of Jan 2011. Let's go through the trades which took place today based on yesterday's preview. I had mentioned that I'd like to sell into the rally of the Australian dollar after European Opens. I'd want to sell the USD CAD pair when oil starts moving up. And how would I want to sell the Euro USD when DAX starts selling? So let's see how one would have traded these three events based on our analysis. First of all, let's pull up the DAX chart, and what you're looking at is the DAX chart, and the DAX begins its day at about 2 a.m. EST. So we did not have a sell-off. Instead, we had a price continued to rise up, and the only time when the price appeared to be weak is when the price crossed the 21 moving average on the 5-minute chart. So it did that at about 5 o'clock. So if we were at all interested in sell trade on the Euro USD, perhaps 5 o'clock when we made a cross to the downside of the 21 moving average would make sense. So let's pull up our Euro USD chart and let's assume that we sold at 5 o'clock. So at about 5 o'clock, when we got that cross below, we had already made the high for a swing high, and we could sell right here with a stop above this swing high with a 1:2 target, and we would have hit our target. So that would be a very good trade. Now let's look at the other recommendations. I said sell the USD CAD. So now let's look at the USD CAD pair. USD CAD was a one-way traffic. Sell virtually anytime you sold into the USD CAD during the European session. Place your stop above these highs here. 1:1, 1:2 risk reward, and we would be able to make some pips. Now let's look at how one would have gone about trading the Australian dollar. I mentioned sell the rally into the European session. So let's pull that out. The Aussie USD. And during the European session, if we had a rally into the European session, what would be an ideal place to sell would be right out here when we had cross on the moving average. And if we tried 1:1 risk reward, we might have had a successful trade. If we tried 1:2 risk reward, we wouldn't have had a successful trade. We would most likely be stopped out at break even. So based on yesterday's analysis, we would have had 2 winners and 1 break even or a loser. Now let's look at today and what to expect for tomorrow. Let's pull up the charts for today. Now I have 2 specific trades for tomorrow, but let us analyze what happened today. Today we had the stock markets up and the dollar and the yen components, all of them down. So all the currencies played their risk appetite card really well. That means the value of the US dollar went down, the value of the yen went down versus all the currencies. So we had Aussie US dollar went up, New Zealand US dollar went up, USD CAD went down, Euro USD went up, Pound USD went up, USD CHF went down, Euro JPY up, GBP JPY up, Aussie JPY up, and USD JPY went down. So the US dollar appears to be the weaker of the two funding currencies. So based on that, I have a trade idea to sell any rally of the USD CAD during the European session. So the idea is similar. On a 5-minute chart, between 2 o'clock and 4 o'clock, if we have a rally on the USD CAD, once price breaks through the 21 SMA, we could attempt to sell the USD CAD with perhaps the idea that it will continue its march southward. And the Australian dollar, let me show you the Australian dollar chart. This is the USD CAD. The Australian dollar chart is actually making an engulfing bullish engulfing candle. A bullish engulfing candle meaning price should start moving up, but as I see it, after quite a few days of a downward move, the price hasn't even been able to technically break above day before yesterday's high. So even though we have a bullish engulfing candle, unless and until we get fantastic employment news from Australia, I'm not going to be bullish on the Australian dollar. So let us just follow the Australian dollar in terms of the news. If we have 20,000 more jobs than which are expected, then we buy the Australian dollar. If it is 20,000 worse than expected, we'll sell the Australian dollar. Let's look at the Canadian dollar chart. The USD CAD has broken its all-time low. So now, if we get a rally into the European session, it is very natural for us to have a little rally or relief rally, and once we finish that rally or that rally tries starts fading out, and we'll use a 21 SMA or a 55 SMA approach. Once price crosses through the 21 SMA or the 55 SMA, I'd attempt to sell the USD CAD pair. So that's about it, guys, right now. Talk to you soon.